So on today's video, I'm going to be showing you the first thing you need to know to be able to smash technical analysis down to the teeth. So as you can see, once you open your chart, the chart is made up of candlesticks, and this candlestick is what will put together all of them together in analyzing the market. So before you know how all of this candlestick works, let me just briefly brief you on how one candlestick forms. Now, each of these candlesticks have a time frame. As you can see on my trading view, we have 1M, 3M, 5M. All of these are time frames. And if I set this to 15 minutes, it simply means each and all of these candlesticks represents 15 minutes. If I bring it down to 4 hours, it means one of these candlesticks this chart represents 4 hours. So that is how it is. All of these time candlesticks are being auctioned by a time frame. So if we're on a 15-minute time frame, just like this one here, it simply means the candle stick opened here, the body. You see, the candlestick has a body and a wick. On a 15-minute time frame, the candlestick opens here at the body of the bottom of the wick for a green candlestick and close at the top of the body. Now, the wick represents that the price within the 15-minute trading time, the price went as high as this point, but it later came down and closed at this point. It also represents that here, this week here, the price went as low as this point, but it opened here. So that is also the same is true for a green candle. The only difference between a red candle and a green candle is that the green candle has its opening at the top, at the bottom, and the closing at the top, and the red candle has its opening at the top, and the closing at the bottom because the price will be going down for the green candlestick. So I hope you could grab this. Let me just go into the trade again and just show you an example of what I just talked about now using candlesticks. So as you can see, we have series of candlesticks here, and if you look at these green candlesticks over here, you see we have the open, close, weak, open, close, open, close, open, close, open, close, open, close represent green candlestick. While if the price come down, it represents the red candlestick. So let's just go into the trend. Now that you know how to identify candlestick, the next thing you need to know is trend identification. You have to know where all of these candlesticks are heading to. Are they going on an uptrend or they are going on a downtrend? So let me just quickly use a textbook example before I show you an actual example. Now, if the price of the asset is going up, now on Binance Futures, if you are trading futures or you're trading Forex, if the price is going higher, you want to buy long. And if the price is coming down, you want to sell short. So you want to be able to first identify whether a price is going up high or is coming down. If it's going up high, you'll be looking for how to position yourself in buying long. And if it's coming down, you look for how to position yourself in buying short. So this is how to identify a long market. When you see series of candlesticks forming and it's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, this simply means the candle or that particular trend is going on an uptrend. So if I open my chart now and I see this, I'll know that okay, this is forming higher highs and higher lows and it's going on an uptrend. Now, mind you, the market would not give you something like this. This is just a textbook example. I'm going to go into the actual chart to show you how to draw these things out effectively. But you just have to understand that this is how the flow of the market moves in higher highs and higher lows, higher highs and higher lows. The same thing is true for a downtrend. As you can see on the downtrend here, we have the higher highs, higher low, price came down, higher low, lower low, sorry, lower low, lower high, lower low, lower high. Now this is a lower high because it's lower than the previous high. Lower low, lower high, lower low, lower high. When you see a market movement is forming lower lows and lower high, you know that this market is selling, the market is dropping. And what you want to do is that you want to position yourself in a good place where you risk less money and you will also trade with the trend. So that is just how to identify higher highs and higher lows. Now, just as I told you, the market would not give you exactly this kind of looks. Instead, the market will do something like this. Let me just draw out a example of how the market will do. Let's assume we're on an uptrend. Instead of the market to give you that funny look and that simple look, I call it simple look, it will give you something like this. It will give you something like this, changing the trend on you, obviously. Now you see that this will be a little bit complicated for someone that is not used to it, but I'll still show you how to work out with all of these sections over here. Now the market will mostly do something like this, and in this case now you find it hard to identify, okay, where is the lower low, where is the lower high here. Let me change this to green so that we just identify that we're on an uptrend. Okay, get done. So this is an uptrend, and how to identify this kind of market when you see it is just using the key structure. Now the higher time is key. The higher time frame is key to drawing out your structure. Once I trade with 1 minute, I trade with 3 minutes, I trade with 5 minutes, I trade with whatever time frame. But the first thing I want to do is I want to see the overall structure on a higher time frame. Mostly I use 4 hours for this. I go to the 4 hours, and if I see a market like this, I'll just identify my structure here. Okay, I'll start from here. We have this here. The market went up, and this is your higher high. What you just have to do to simply get it is just mark it out. Once you notify that higher high, just mark it out. Okay, we have a higher high here, and you have this now came down. This is your higher low. Now if you go to a shorter time frame, if let's assume this is a 4 hour chart, if you go to a downtrend shorter time frame, this is an actual downtrend, and you can catch a short here. But you want to know when you are working with the market and when you are working against the market, so that you know how to catch. I'm also going to show you all of these things. Let's just talk about how to identify trends. Now you see that we have this to be our higher highs, and this would be our higher low. Now this would be our higher low because this is one low that broke this zone. So what you are going to do now to still keep that understanding, you just mark that low out again. You could just mark that low out. Okay, we have this lower low here. This is another lower low at this point here. Then what do you want to do now? After you've marked this, now you've identified that I told you this is how the market moves. Let me draw it out at one side so that you don't get all mixed up. For an uptrend, we have it definitely create out higher highs and higher lows, higher highs and higher lows. So this is just a textbook example, but the market will not give you a simple structure to it like this most time. So let me just change this to green so that we know that we're on uptrend. So now you've identified the higher highs, you've identified the higher low. What you're doing again, you've identified another higher high, because this is the previous higher high and this is your new higher high. So what you do, you mark it out. You mark it out up to the zone to get to where you know that, okay, this is what the market is likely going to do next. Okay, now you mark out your next higher high. Now this would be your higher high, this would now be your higher low. Like look at this structure, higher highs, higher low, higher highs, higher lows. Now look at this, higher highs, higher lows, then we have the higher highs. Now for the higher highs to continue, you don't want to see this price come down below this section. Let me get this very clear at this point. Now at this point, the price could sell down, 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 down to this point, and a wick would come and close here. But you don't want to see the body of the candle close below it for you to consider that you're still on that uptrend. And for most time, maybe we'll not get there, we'll just wait to come and grab out all of the liquidity. We're still going to be talking about liquidity in the nearest future. Let me just get this out first. Let's continue about our trend identification before we go into liquidity discussion. So let me just take this out. Let me just take this out. So this is it. You've now identified your higher highs, your higher lows, your higher highs, your higher lows. Now this would be a valid higher low because it broke this structure. So what you do, you mark it out again. This would be your now another new section of a valid low. Now this low is valid because it broke your previous higher high. I don't know, maybe you're getting the whole lyrics to marking out your markets. Just use the key structures, the key structure point to mark it out. Now, as you can see, now look at the trend. Understand it. Higher highs, higher lows, higher highs, higher lows. You now have a new higher high at this point. Liquidity higher low. I hope you get in. You mark out that structure. Now, this was the structure that this is the low, and this is the low that broke to a new structure. So this would be your higher high. You mark it out again. So basically, you use this method to understand the market movements more. Use this method to understand the market movement more. As you can see, we have this moving liquidity taken out. So now let's look at this market again. We have the higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and so once you get here, you know that okay, now this market is ready to form another higher low, higher high. So once we're on an uptrend, we want to consider trading the market on an uptrend. You identify the trend this way. Now let's switch the balls and let's talk about how to identify downtrend. Now, just like the market will not give you the complete textbook example I showed you, we will do something more like this. So let's just draw it out to more clearly understand the downtrend at this point. So I told you a downtrend is a series of lower lows and lower highs, something like this. When you see the market is creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now, this is telling you that the market is on a downtrend. And when the market is on a downtrend, your aim should be wanting or looking for a position to join the market to sell short where you will lose less money if the trade is to go against you. So you're looking for a position where you join the market to sell short where you will lose less money. So the market will not give you this exact textbook example. Instead, the market will want to do something like this, creating a lower low for you this way, then your lower high. In this lower high, you might see it to be another a fresh trend, lower high, come down again, just play around before it gives you that lower low again. I hope you're getting the whole gimmick behind this. I don't know, maybe I'm really drawing this out well, but I'm just using it to give you how basic structure of how you see the market in a rough sketch. So if this was to be a downtrend in a market trend, what you want to do is that okay, you look at this from this point. You say we have your lower low. At this point, what you want to do, you mark it out. Okay, this is my lower low. You mark it out. We're just going to be talking about trend identification on this video. This is my lower low, you mark it out. Where is the next, before the break of this structure, where is it? We have this zone over here, and here will be now your lower low. So just understand, lower low, lower high, lower low, lower high, lower low again. This low that broke this place will be considered as your lower low. Now, I know there are many structure here, and we'll still talk about liquidity graph, don't worry. On the next video, we'll talk about liquidity graph. This would be the low, the recent low that broke to a new lower low. Is that would be your low. So as you can see now, look at this structure, look at this one. Lower low, lower high, lower low, and the next one will be lower high. Any low that broke this section again would be your lower. Let me draw this out for you at this point again. As you can see here. If you understand the market now, we have the lower low, lower low, lower high, lower low, lower high. Now this would be a valid low because this was the low that broke the recent lower low. Now this was a lower low, but we now have a new lower low here. So you see it broke it before it gave us this retracement. So that's just how to mark out the structure. I just want you to go into the trend, identify all of this structure this way. Let me go into a 4 minute hour trend of this pair. Let's see the initial chart. You guys call a trade on this pair in the morning. Let's just look at it here. Now, the first thing you do is if you looking at, oh, this is very rough, but looking at this 4 hour trend over here on this APEC USDT, you will notice one thing. What is the market currently doing on the higher time frame? What is the market currently doing? You see that we're on a downtrend. If you are to notice this trend very well. And once we're on a downtrend, you want to use the advantage to look for short trade. You can also still get long trade inside of the short trade. So now look at this. We have this point here, lower low, lower high. What do you see the market do again? Creating another lower low, lower high. Created another lower low, lower high. Created another lower low. So I hope you're getting the jet. Lower low, lower high. It keeps going like that for a downtrend. And you want to first go to your 4 hours, observe what the overall market is doing before you now decide to pick trade on other section of the trade. So I just want you to go through your chart, be able to understand and identify trend. Once you are good at identifying trend, understanding the structure, is this market going on an uptrend? Is this market going to on a downtrend? This is where you now get the basic understanding of when we are going to be talking about liquidity and fair value gaps and um, other blogs and the rest of them. So I just want you to go through the video, watch it over and over again. If you catch some value from this video, do ensure to subscribe to the channel, leave a like on the video. And if you have any question, just drop it in the comment section of the video. I'll be creating a more in-depth um, video if you don't understand this, but just understand this video now. In the next video, we're going to be talking about liquidity, fair value gaps, and the rest of them. So the first thing you need to know is understanding candlesticks and market trend, or I call it market direction. So see you on the next video, guys. Peace.